What is your outlook for the global economy in 2023?
Thank you for asking that question. I think before getting into the outlook of 23, we need to understand first where we do come from in past recent years. I would say in recent years we have seen three different kind of events to mention. The first one has been the lingering commercial war between the US and China and its consequence that we can still feel on the global trade. The second one, I would say, will be the COVID-19 in 22, which really disrupted the whole demand and supply chain. 21 had seen as well a surge in demand after the COVID-19 and the 20 year. And the most recently, we've seen the outbreak of the Ukraine and Russia war. Its impact on the energy crisis is not to mention also. So when you see this global situation deteriorating, we're coming into 2023 with obviously a lot of threats, a lot of anticipation, and clearly what I'm saying is the following: inflation, which has been the most important theme throughout 2022, is going to still be the case in 2023. And that high inflation will be addressed with key rates, especially on the ECB and on the Fed side, to keep at the high level. The additional reason for it will be as well the labor market, which has shown some sign of strength. And my anticipation and my guess will be to have key rates still be hiked to 5.5% for the Fed, and no rate cut this year. That's the first thing. The second thing will be the China reopening, which is clearly going to have an impact and which is going to strongly support financial markets in general. We've seen last week's FTSE at all-time highs, and it's not going to be a surprise for me if you see those development on other equity and stock markets in general.
So how do you maximize safety and return for your liquidity in the current turbulent times?
That is always the question which are being asked. Obviously, it's our job, find the right balance between the risk and the safetiness. And given what I just said regarding, the global economic framework and the global market framework, I would say, and considering where rates will be, I would say one thing I will play myself will be to do the carry trade, especially on the fixed income side. So carry trade means you will be buying bonds between 2 to 5 years, and you have to be selective in this bond selection. But clearly, this carry trade and this kind of duration trade should be one thing to play. I mean, in my view, in my perspective. And the second thing I will say, equity market might be seen a bit shaky, a bit volatile, a bit unpredictable. And in that sense, rather than go equity outright, I will favor structured product, with deep downside protection as a kind of response and answer, to gaining kind of exposure to equity market while still gathering some yields out of it. So I think that will be, in a nutshell, the two ways I will be playing this 23 and the safetiness and the balancing safetiness and return.